Hello, and welcome to Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik, and my esteemed co-host is Sir Michael Fallon. Our guest today is Jason Hsu, founder and CIO of Relied Global Advisors. Jason, hello, and thank you very much for being with us today. There has been a lot of talk, more than usual, about China, Taiwan, about the equity market in China. And with you being Taiwanese, I would like to start with the Taiwanese view of this whole situation.
Yeah, absolutely. So if you talk to people in Taiwan, right, you generally will find kind of almost split down the middle, kind of two camps when it comes to their view on China. And it's complicated by there's like another layer on top of that, which is really the support for the two major political parties, the Green Party and the Blue Party. The Blue Party is sort of, on a platform of sort of pro-positive relationship with China. And the Green Party is, of course, more of a anti-China, declare independence, seek, Taiwanese sovereignty. And of course, these two parties are more than that, right? I mean, on any given day, it's a power struggle on who takes a major city, who controls the budget, who gets to spend on their constituency, who gets to stuff the pork they needed to sort of, enrich their party supporters. Or on any given day, the two political parties are not fighting about the China issue. But on election day, right, that's sort of the easy item to talk about. So it gets very sensationalized. And of course, either party will use kind of their sort of platform with regard to China to try to gain an edge in the election. And then so, people are almost sort of forced, coerced into focusing on these two issues during an election year. So, as a Taiwanese, I think it is a highly politicized, very divisive issue that in some ways is sort of drummed up to be bigger than it is by the two political parties during a election year.
So what you're saying is that ordinary people are not really worried about China potentially invading.
The ordinary people in Taiwan knows it's just sort of a hot emotional topic during an election year. And it, in some ways, proxies more whether you're a blue supporter or a green supporter, right? If you're a blue supporter, you kind of support their view on the way to grow the country is to have more trade with China. If you're a green supporter, then you're pro a view of, the best path for Taiwan forward is to, declare independence and have sort of U.S. get in between Taiwan and China. And that is much more of a party support and party driven narrative. But as a sort of Taiwanese person, if you think about, are you constantly in fear of being invaded by China? Do you have a very negative view about Chinese people? Do you think about, am I Chinese? Am I just ethnically Han? Like those would be kind of at the fringe for very politicized individuals. They may think about that, but for most people, those are not interesting topics that sort of impact kind of their daily lives. Right? They don't live in fear of planes flying over Taiwan, dropping a bomb. Right? They don't live. They in fact probably have a more positive understanding of China because most people in Taiwan travel to China either on vacation, do business. There'll be people who do business there and interact with Chinese people who come over. So they benefit hugely from the trade relationship. So they actually in some ways have a more realistic understanding of the interaction.
Jason, I'm interested in the effect on Taiwan and the economic expectations you have there of the fragilities elsewhere. Can you give us your take, if you like, on the effect of the conflict in Russia-Ukraine, the new conflict in the Middle East? How is that beginning to shape thinking in Taiwan, or is the relationship with China just big enough anyway?
So I would say it's certainly changed what used to be a very simplistic naive narrative sold by the political parties, and then obviously having an impact on the psychology of, Taiwanese people. The old narrative is, stick with the US and the US will fix everything, right? US is on the side of Taiwan, of democracy, and it'll do anything and everything to protect Taiwan because that is the good and right thing to do, right? That is what, the number one country in the world, the champion of democracy, will deliver. I think with the Russia-Ukraine conflict, right, what they saw was, U.S. is fairly tentative. It's got to lean on the European alliances. It wants the European alliances to do more, and they're maybe comfortable with taking away SWIFT as the ultimate weapon. It's some sanctioning. But, does U.S. come in and fight the war for Ukraine? No. I mean, the U.S. is even divided on, well, how much can we support militarily? What kind of weapon can be sold? And so I think that's woken up a lot of Taiwanese people. It's like, if that is the U.S. commitment and support, and then they also realize, once the conflict broke out in the Middle East, the U.S. gets a lot more distracted, and all of a sudden, like, Ukraine gets very little attention and may become an afterthought. And so Taiwan's realizing, Taiwan could easily become an afterthought relative to sort of U.S. priorities.
If we look at it from the Chinese perspective, at least it's my impression that China is playing a very long game. They're not trying to incorporate Taiwan immediately. They're not going to fight Taiwan, invade it, bomb it. It's not the plan. The plan is to integrate them, to trade with them, or to integrate them economically into the Chinese ecosystem. If it works, then it's a very, very slow process, but it's a one-way street. To me, it seems like the only possibility where China may apply some military force is a situation where Taiwan declares independence. This is unbearable for China.
Igor, you're absolutely right, because I think we often make the mistake, right? Commentators would speak about China, right? I think you really more precisely want to speak about Beijing, right? You want to speak about the current administration, right? The current core of people perched at the top. And what they think about, like all politicians, is how do I stay at the top, right? Just like U.S. politicians think about, how do I get reelected, right? Once I get reelected, I can worry about other things, and other things should be correlated with my future election. It's the same thing for Beijing, right? Beijing is thinking about, well, what strengthens my grasp on the power, right? What strengthens legitimacy, make it easier for me to have more control, have more of my people everywhere. And so they have to have a credible threat in saying, look, if you declare independence, right, some very, very horrible things is going to happen to you. And it just doesn't matter what the U.S. says. So we're willing to go to extreme pain and self-harming to make it so painful that you don't do it, right? That's like the only thing they have to do, because it's the only unacceptable outcome. If they if they integrate Taiwan, does that strengthen their legitimacy? No, because I'm sure the integration is costly, expensive, it's fraught with challenge, it unmasks, the incompatibility between a democracy and a one-party state, right? I mean, it's much messier. So what's positive for them is, like, we have a plan to integrate Taiwan, and we know the Taiwanese people, majority of them will embrace that, blah, 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 blah. Like, for them, that is all they need, right, is to maintain that narrative. There is, right, no positives to creating an actual armed conflict with the U.S., because it can only weaken their grasp onto power, right? It can only introduce volatilities. If you're fully in control, why would you want to introduce that volatility to yourself?
Yeah, absolutely. So basically what you are saying is that if there is a conflict around Taiwan, it's not going to be instigated by China.
Right. It has no upside, right? Status quo is beautiful, right?
Jason, can I take you on to the economy, if I may? As China moves up the kind of value chain in technology, what is the effect on the Taiwanese economy?
And this is, in fact, what the world really should be thinking about, right? Because there is really the law of unintended consequences at play here. Because what you want is, you want China to say, look, we're very happy to be here within the ecosystem, right? It's easy. We are making good money. You're here in the ecosystem. You're making good money, and we all trade, right? The minute you say, we think we can hurt you by taking that away. Yes, it's short-term painful. The people who make money the old way will now have to think of new ways, because you're cutting off their ability to make money. So it forces them to do all the things that Taiwan currently does, right? And again, if you look at how China has advanced, right? They've advanced by lifting major teams out of Taiwan, out of Korea, throwing lots of money at it, and then get good at something, and then through sheer scale in the domestic market, just take sort of business away, from competitors. And so you never want to encourage them to come into your space, throw billions and billions of dollars at it, and lure very highly talented people with huge compensation package, and then take your business away, right? And we somehow think that our way to stop China from advancing is to sort of force them to invest aggressively into much higher value add production.
At the same time, the rivalry between the US and China is getting more and more serious because there are threats to the status of the US as the biggest economy in the world. Already now, if you count at PPP, China is a bigger economy than the US. It's a much larger country. It has like 4 times or 3.5 times the population of the US. Is there any incentive, in your opinion, for the US to rival China militarily at some point? For example, to close down Malacca Strait or do something else of that kind?
So I would say there are sort of 2 major competitions, going on. One makes a lot of sense, right? One is geopolitical competition, right? Competition for influence, competition for access, for political allies. And that makes sense for the U.S. to be very concerned about the rise of China. It makes sense for the U.S. to be very concerned about where it's losing influence, right? Because that influence is worth a lot of money. And there's the other aspect, which is sort of economic competition, which makes no sense at all, right? Because the U.S. has never competed with China economically, right? They're in a value chain, right? They're in a marriage in a way, right? Like, U.S. needs cheap import from China. U.S. needs workforce to focus on sort of business model innovation, basic research, scientific innovation, product innovation. It needs China for sort of low-cost manufacturing. That trade has benefited the U.S. tremendously. It's benefited China some, but you got to say, the terms of trade is strictly in favor of U.S. consumers and U.S. firms that outsource, right? So there's no competition when it comes to trade and economics, right? And to try to make that into a competition as U.S. would really like to take back, low-cost manufacturing because, boy, we just got a lot of unemployed workers, right? That's insane, right? The U.S. has record low unemployment, right? We can't afford to have people to go do low-cost manufacturing, right? It's got an aging population, it's got boomer retirement, right? So our dependence on China for low-cost manufacturing should actually suggest a happy collaboration where, China keep manufacturing low cost and actually lend us the money to buy your production. So that part doesn't make any sense. That's really politically motivated, and it's because the voters in the U.S. don't understand simple trade economics. But the other aspect, which I think you were alluding to as well, is the geopolitical competition. That makes sense, right? Because it is influence in South Africa, Latin America, Middle East. That's access to both, raw resources, energy. It's access to, defense bases. It's access to water rights, airspace rights. That I think it makes sense for the U.S. to go, well, we like to be the only game in town because, I don't want to pay up for those access, right? If I'm the only game in town, I negotiate my prices. But if there are now 2 people negotiating to get access, all of a sudden prices are higher, and then U.S. doesn't like that. That makes sense.
When you look at it from a geopolitical perspective, and actually even from geographical perspective, then China, despite having quite a long coastline, does not have a very easy access to blue water because it's surrounded, we can go around the China shores. You have Japan, you have Japanese islands with Okinawa military base, then you have Taiwan, you have Malaysia and Indonesia, then you have this narrow stretch of water called the Malacca Strait. And actually, people do not quite realize that the importance of the Malacca Strait is probably higher than the importance of the Suez Canal. For now, China is still not able to challenge the US Navy, but they've been building the Blue Water Navy for quite some time, and I don't think that they're going to stop. Another thing which they have been doing, which is quite impressive in my opinion, they have helped reconstruct the port of Gwadar in Pakistan. As far as I know, they are going to connect the northwest of China to that port by railroad. And this will make them less dependent on the Malacca Strait. How well do you think all these developments are understood in the Western world? They're clearly very well understood in China. They know their limitations.
Yeah, so I think the Western world, and obviously people in the U.S. State's Department, right? I think at the highest level, they're looking at this. They understand the strategic value of access to water. They understand the strategic value of land transportation to complement, supplement, and to sort of back up, the inability to access water when you need that, right? So they understand what China is doing. But I would say broader Western observers, I think they gotten too used to a lazy and easy narrative of almost like the Iron Curtain, right? This is like the China trying to push out the communist curtain and to capture neighbor economies, neighboring countries, and then it's sort of being viewed as it's kind of this tentacle of evil being spread, and I think that's silly, right? This is just China recognizing that. Look, first of all, it has tremendous amount of capital that is idled in U.S. Treasury that supports the U.S., which doesn't make sense for China, right? So we would prefer to put those dollars to work elsewhere to build valuable alliances. And it has tremendous sort of manufacturing infrastructure, skilled infrastructure workers that they want to export to the rest of the world. So basically they're lending you money to consume, Chinese infrastructure building. And that is completely compatible with their needs in economic development and their need for even greater exporting to drive their economy. And then on the Navy side, right? Boy, for any administration, we all know if you can sort of print money to build aircraft carriers, it's far better than spending money to blow up other people's aircraft carriers.
Do you think they can start to rebalance their economy to a more consumption-led growth without penalizing the middle classes who may have invested in property, may have invested in shares, but don't have the welfare systems to make childcare cheaper or to look after their parents properly in old age?
Yeah, so there are a lot of problems that China face. Some of it is unique to China, some of it's just broadly true for the Asian economy, and some is sort of broadly true for all of humanity, right? So let's kind of start with things that are a bit more unique to China, and perhaps it's broadly true of other export dependent Asian economies, which is this beautiful dream of, hey, when you're advanced enough, you can be like Europe, you can be like the US, where you are a consumption-led economy, right? Oh, what is a consumption-led economy? Consumption-led economy means you consume way more than you produce, right? So you're spending more money than you make. Well, we can't all do that, right? Like a consumption-driven economy has to be completely offset and balanced by a savings and productions-based economy, so they come together for proper market clearing, right? Because U.S. can't, hey, we want to consume more than we produce, and China says, oh, we want to do the same thing too, and they can happily go consume, right? Who's going to produce, right? So China can never move away from being a export-led, production savings-based economy, as long as we haven't cleared out the excess consumption in the U.S., right? As long as U.S. and Europe continues to have the balance sheet, the wealth, and the currency strength to buy, right? That China can't unilaterally change that. No more than U.S. can unilaterally say, I want to consume if other people don't want to hold U.S. dollars, right? U.S. also doesn't have that unilateral power, right? And that's why it's so scary for the dollar to ever lose leadership, right? And so, I think that is sort of people who talk about that. It's not something you can force, right? Like China becoming more of a consumer economy can only happen very gradually as the U.S. also change, right? And that is going to have to be driven by a very, very long-term demographic. And in the short run, right, like Europe is still aging faster than Asia. We might say, oh, Korea's aging, China's aging, blah, blah, blah. But the rest of Europe is already old and on retirement, right? And Asia is still manufacturing. So it's going to take a while for any true rebalancing of manufacturing and savings dominated economy to go the other direction. So that's one thing. So I think people should not sort of focus on, China isn't consuming enough, and that is sort of bad for China, right? That I think is very flawed analysis. Then the other one is of course, I think also quite uniquely Asian is because they save so much, right? Like when you produce a lot and you send the production overseas to other people, and whatever comes back, you don't consume it because the consumption is already sent to someone else. So you got to put that into some store of value, right? And I think Asia has, by and large, put wealth into things that are not productive, right? They're not risk capital, right? For Chinese, it's into real estate. For Indians, it's into gold. And then those are sort of big issues for those two economies, which is like your savings don't become risk capital that drives technological innovation, that drives long-term sort of investments that help entrepreneurs build great businesses. And a lot of that is cultural, and cultural tendencies are far more difficult to change. And it's not lost on Beijing, and nor is it lost on Modi, that to drive that savings into productive risk capital is so critical for more growth, for catching up to the US, where households are very comfortable letting their 401k and letting their pension be long-term, risk on investments. Asia just doesn't have that. Even when they have it, they prefer to buy sort of US assets, right? So, that's going to be sort of a natural headwind for true innovative growth. Now, again, it may not be a problem, right? Like, China can always be within the ecosystem as sort of the manufacturer rather than the sort of innovator, as long as it stays in sort of a healthy relationship with the U.S. But again, thinking that somehow magically, China will move away from real estate and into private equity, venture capital, listed stock market, and offer long-term risk capital to finance its own economy. Again, that is not easy, and nor have we seen that be very successful in the rest of Asia.
Don't you think that as China is trying to make the renminbi to be a global currency, basically, they're trying to get away from the US dollar. They're trying to reduce their holdings of the US treasuries, which were used, basically a loan given to the US to buy from China. This change in balance in the dominance of currencies by itself is going to move China towards consuming more.
Yeah, Igor, you're absolutely right. I mean, I wrote about 3 years back. I said, it's actually a red herring to think Xi Jinping's biggest agenda is Taiwan. His biggest agenda is for renminbi to be a credible alternative to the US dollar, right? Because if he's thinking about what is the biggest value, and also what is sort of biggest, bragging right, for his legacy, it's going to be, making renminbi a global reserve and transaction currency, right? Because that would be truly the rise of China, right? Like enough countries believe in the things that sort of back renminbi, right? The strength of currency is about the political system, the economy, the quality of the assets, the quality of sort of, cash flow and stability of government, right? All of that goes into backing the value of currency. And if the world's willing to use renminbi, that means the world says, hey, look, we're willing to believe in a one-party state as being a stable, viable form of government, right? It's a belief that the assets there is of high enough quality that people are willing to hold renminbi because I can exchange for sort of high value assets, right? And so for Xi Jinping, that is a much, much bigger game that he is playing. And then we all know, right? Like, the exorbitant privilege of the dollar, right? Like I'm sure the US is extracting like an additional 1% in terms of GDP value from the entire world because of its currency and its global value. And China loves to be doing that too, right? Like that's like, it's almost like e-commerce, right? Like if you're in charge of such a foundational element in e-commerce and you get to clip a toll charge for everything that goes through your system. Boy, that's amazing business, right? And so you're absolutely right. I mean, China is going to find a way to push the renminbi forward as that second reserve and transactional currency, and it's going to take time, but it will also get there, because I think the biggest mistake U.S. made was to make it very clear. I think when USSR, we get a lot of value by letting you use the US dollar, so we're charging a rent. I think people accept that, right? It's fine. I think people only start to question. It's like, like we don't mind the fact that we use credit cards and clearly they're getting a fee off of our transaction. It makes what we buy a little bit more expensive. We only mind if we feel like the credit card company can unilaterally look at my transaction and say, no, you can't use credit card for this purchase, not purchase. And if you irritate me too much, you just don't have credit complete, right? That's when I should probably have a second credit card. Right? And the minute US says, look, we can weaponize the dollar, the world kind of go, okay, maybe I'm US friend today, but there's no guarantee the next president wants to be my friend. So what does that mean, right? So I think the US has kind of shot itself in the foot once we made it so public that we can weaponize the dollar. And once we make it so public that how we weaponize it could be completely whimsical depending on who's the president, then people have no alternative but to have a backup plan, which is, is there another credible currency that is not correlated with the US, right? The British pound, the Japanese yen are highly correlated with the US, right? If US is going to have a sanction, Japan and UK are right there with it. Eurozone is right there with it. So it kind of leaves China as the only credible alternative to be an uncorrelated currency.
Now, Jason, you mentioned the next president there. How different do you think Trump would be in power, in office, to the current administration, or indeed to previous Trump, to Trump 1?
I think Trump 2 and Trump 1 are going to be very similar. And the similarity is not in decisions that get made, right? That's what's special about Trump, right? You cannot predict his sort of next decision based on his past decision, right? Just what is sort of going to be consistent is it's going to be potentially amusing, very volatile, and what goes into it can defy logic, can defy data and analysis. So what you're going to get is you're going to get a lot of unpredictability. And what that means is also then it'll be harder for the U.S. to coordinate and drive kind of global geopolitics, right? Because I think at least under Biden, again, you can disagree with decisions he makes, but at least under Biden, Europe feels like, look, America really wants to do something, and they're going to sort of pull us in, and it's going to make enough sense for us, coercion and otherwise. And same thing, with Japan and South Korea and Taiwan, right? There's going to be a lot of U.S. coordination to sort of pull people into the grand U.S. plan. I think with Trump, right, we saw in Trump 1, that didn't happen, right? Trump was very good at irritating most of Europe and saying, look, it's just what's best for America. And I'm going to, in every situation, have a brand new negotiation from kind of the Trump perspective. He did the same with Asia. And I think it'll be far harder for U.S. to build a united front during the Trump administration.
That's an interesting thing. And also the point about weaponizing the dollar brings us to the question about the union, or at least the cooperation between China and Russia, where Russia is clearly a junior partner. I believe it was about 3 years ago when the geopolitical analyst Marko Papic suggested that the best thing for the US at that point would be to make a detente with Russia, basically not to let Russia become too close to China, because the real problem for the US is not Russia, the real problem is China. How stable do you believe the relationship between Russia and China is? And second, how does China view this relationship?
Yeah, so I would say, China has historically have a far more positive relationship with the U.S., and Chinese people generally think of everything U.S. American as good and wonderful, worthy of imitating and embracing. And Chinese people have historically been quite anti-Russia, and its administration included. Right? They both realize that the political animal that runs Moscow and Beijing are always sort of sort of scheming against each other, and because they don't trade very much, right? Other than kind of the energy trade, there's sort of not the rest of the broader free market, the private enterprises that sort of always brings a relationship back to some form of normalcy and stability. So the Chinese and Russian relationship is not one that's driven by economics, but one that's driven by sort of kind of historically, politically communist, even though Russia is no longer communist. And they've really never been that close, right? And like, I think the West is forcing the two of them to ally up, right? It's like the West is creating the enemy of your enemy is your friend, right? And if the US doesn't want Russia to get close to China or China to get close to Russia, we're almost doing the worst possible thing, right? By antagonizing both of them into having to collaborate.
If we think about the Chinese market, I know that you are actively invested in China. For a foreign investor to invest in China has not been that easy. So the first question is, why should people care about investing in China at all, especially after very significant losses, which the Chinese market has incurred? And the second thing, if for some reason they believe that it's a good idea to go into the Chinese market now, then what's the way?
Yeah. So, first of all, I mean, investing and accessing, listed Chinese companies is super easy now, right? It used to be difficult, and I think that has colored a lot of the thinking and lens of old school international EM managers. They think, these countries are hard to access, expensive access, bureaucratic, all the paperwork we got to do. That's just, it's true still of, I think, India and some other EM economies, but it's just not true of China anymore, right? Through the Hong Kong Connect, and now it's super easy to get even higher access through kind of QFII quotas. Like accessing companies listed onshore in China is just not a problem anymore. Not to mention a lot of them have actually made it easier by having dual listing in the US or in Hong Kong. So, access is not an issue. The true question is, from a portfolio perspective, right? What does it do for you, right? and it's easy for people to say, why would you need to invest in China? Look at how poorly it's done. Over the same time, look at how well US has done. That is both, a simple and a naive argument, right? Because you could say, well, why would anyone ever need to invest in anything other than NVIDIA? Look at how well it has done. Look at how poorly everything else in S&P might have done, right? Like, it's precisely that, right? It's like, you don't know NVIDIA is going to do so well, and you don't know, Walmart is going to do so poorly. So you kind of have both, right? And anyone who says, of course they could predict that, China being an autocracy is going to fail, and then US will, always, be driving forth technology, and the AI thing was sort of guaranteed at that. But, it's hindsight 2020, right? Ex ante, I think, you roll the clock back 10 years, most people are saying, look, China is going to overtake the US as the number one economy. You want to invest in their company because that's going to be what's going to grow, right? So if you just look at, yes, US and China seem to have very different outcomes. That's diversification, right? In the portfolio context, that's what you want. Because unless you have a crystal ball, right? If you have a crystal ball, you don't need diversification, right? If you have a crystal ball, you should invest in one thing, right? If you don't, you kind of go like, what do we know for sure? Very little, right? Could we have predicted how poorly the stock market would have reacted in China after COVID? No, right? And can we predict the next 10 years that Chinese companies will continue to struggle? No, right? And this inability to know for sure, right, is why we have diversification. And then China is a great diversifier.
Yeah, but at the same time, people may say, okay, if we go 2 years back or slightly more than 2 years, then Russia used to be a great diversifier, and many investors had investments in Russia. And what happened to them?
Yeah, what happened to them is certainly, at the outset of the Russia-Ukraine war, if you held, Russian securities, right? You done very, very poorly. And if you then were sort of freaked out by the optics and the headline and sold your Russian position because you for ESG reasons and other reasons, you didn't want to be viewed as holding, Russian assets. Yeah, you would have done very, very poorly. But had you sort of go, who knows what the hell's going to happen? And certainly selling when an asset falls to close to zero doesn't make any sense, right? Had you held on, rubles come back, a lot of the asset prices come back. You probably would not have been that much worse off, right? If you sort of buy and held and just ignored it.
Yeah, well, most investors have to hold to their assets because they can't really sell them due to sanctions. And the problem here is not that the Russian assets performed poorly over the initial period of the war, because most of them have recovered anyway. The question here is that you can lose access to your investments because of sanctions. And if due to this geopolitical rivalry, which we discussed earlier, China gets sanctioned, of course, it's never going to be sanctioned to the same extent as Russia. It's impossible. It's a much bigger economy. But nevertheless, just imagine that there are some sanctions on the Chinese financial sector, and you, as a U.S. investor, don't have access to your assets anymore.
Yeah, and so I think this is absolutely a great point in the sense that, as an investor, right, an asset that, through political sanctions or otherwise, where there's a lot of barrier that causes people to not want to come into the asset, so it trades at a more distressed pricing, even if the underlying quality of the asset, the underlying quality of the cash flow and cash flow production hasn't changed. Those are great for investors who don't face the same access restriction, that don't face the same sanction, right? So it absolutely sucks to be a Chinese company operated by a Chinese entrepreneur who has nothing to do with the Communist Party, who has no ill will toward the U.S. It absolutely sucks for him to not be able to get capital, to trade at horrible distressed prices, and therefore pay much higher cost of financing to keep his business going. Right? It sucks for him. But it's great for an investor who says, and because you can't get capital at fair prices elsewhere, I can charge you a little bit more, and I earn a much higher return from you, right? So I think as an investor, that's how I see it, right? I don't go, it probably is unfair, and it probably is bad for Chinese, entrepreneurs and business owners and workers. But as an investor, all of a sudden, I just get an extra premium from lending my capital there, right? Whereas I never feel like I get an extra premium lending my capital in the U.S., at least back when interest rate was zero and everyone is fighting everyone else to hand over free money for entrepreneurs to light it on fire, right? Like I'd rather be at a place where capital is valued and I can get my premium.
This geopolitical risk is priced in the market. You are actually going to get it.
I will give you one, right? Like if you think about geopolitical risk is priced, but it's only priced in China, right? Because if you think about Chinese stocks are trading as if they're going to start a war with Taiwan and the backlash is going to destroy them. And then you look at Taiwanese stocks, right? It's priced as if that's not going to happen, right? So the Taiwanese stocks doesn't price any geopolitical risk. The Chinese stocks price exactly the same geopolitical risk at a very high premium, right? Because how can TSMC be at record high when the U.S. even say, the minute Chinese, right, do anything with Taiwan, we are going to, if the Chinese don't blow it up, we're going to have to go blow it up, right? If there's a geopolitical risk of the conflict, right, it clearly isn't priced into TSMC, but it's priced across the board for all Chinese companies.
And so this is your reason to prefer China to other emerging markets?
For sure, right? Because I think, a lot of other emerging markets are benefiting from the friendshoring narrative. And then we don't actually know how big that will be, how much margin can you really transfer from a thriving business manufacturing out of China to then in India, right? Because it could get there in terms of the manufacturing, but could it get there in terms of cost, right? And then there's sort of investments, you got to recoup that, right? So I think, there are a lot of EM countries that are benefiting from the friendshoring story, and we gotta kind of go, there's a lot of story being sold, right? Is it going to materialize? We don't know. And then China is clearly this sort of distressed value play, right? Which is that very same narrative is also perhaps creating a price that really doesn't make sense if you think through the dependency between the U.S. consumers and the Chinese manufacturing.
Okay, but in your view, if there are natural forces which are more or less inevitably going to drive the prices of Chinese assets up, why do you think the Chinese government needs to step up and support the Chinese market?
So, clearly what has happened in China, right, is a sort of a number of significant shocks, the biggest one being the real estate one. But boy, like to think sort of the pricking of a real estate bubble, a shock to real estate, some deleveraging is sort of new and unique in China, right? Like you look at Japan, right? Then you look at the US during global financial crisis, right? Like the order of magnitude and probably the amount of leverage are far larger in terms of size of the bubble and the amount of leverage in the system. Japanese handled it poorly. I think the Americans handled it near beautifully. And, these are two data points for Beijing to look at, right? Like, yes, like these shocks, if you don't deal with them, both the psychological crisis and you don't manage a shock well, it can become systemic and it becomes a real problem that could last for decades. But if you deal with it well, right, you can often help the economy recover from that. And so the path is available to China and the data points available to China to choose. And so to make it larger than that, I think is silly, right? Because this isn't because it's a communist country. This isn't because it's China, right? Like real estate crisis just happen, right? It's happened everywhere. And many countries have come back from it stronger and better, and others have not. And I don't think it's anything more than the policymakers taking big decisive actions.
Yeah, but not all governments step up to support the equity markets.
Correct. And then, I think, the U.S. stepped up to support financial institutions and basically created a government put. And that government put sort of then created enough confidence, brought back liquidity, credit, and sort of positive willingness to take on risk. And, China is trying to figure out a way of where can it also replicate that government put to get money back in toward investing, right? And so I think the government says, look, we probably don't want to be creating, a government put on real estate because they're actually trying to deflate the real estate bubble still in a sort of slower motion, and they don't want more real estate speculation. What they actually want is long-term risk capital, and that really is money into stock markets. So what they're choosing to do is we're going to give you a government put, on equity investments, and that would then revitalize private equities, venture capital. But right now the government's going to tell you this is the bottom, and there'll be unlimited amount of money printing and buying, so that you don't get the downside. And we can't guarantee the upside, but we can sort of cap off the downside. Are you willing to come and offer long-term risk capital with that kind of risk subsidy?
It's quite interesting that with this almost unlimited money printing, China is still trying to maintain the exchange rate of the renminbi where it is. As an exporting country, it would be an easy choice to let the currency depreciate, and it would solve many issues by itself. Yep. But it seems like it's a political issue.
Yes, and this is where you always need to analyze China with enough of kind of the politics that happens behind the scene, right? It's it's like if people kind of go, China doesn't have elections, right? Why do they worry about optics, right? Why is there politicking? No, it's exactly the same thing, right? The U.S. politicians think of like, what do people care about? What sounds good. Beijing thinks the same thing. All the bureaucrats think the same thing, right? It's like you want to be popular, you want to look like you're making great decisions, and what are the things that make you look weak, make you look incompetent? You don't want that. And the strength of the currency, I think for too long in China has been sold as, look, the currency has strengthened. This is the country progressing. This is the world recognizing our value, right? And then for the slide back, they would have to sort of face the narrative that they've sold for so long. Like, again, this is because the world doesn't value our assets, don't believe in our growth, don't believe in our future. So the government is sort of very sensitive to that, particularly a new administration, fresh on its third term. But you are right? Like, they should be like Bank of Japan, who says, weaker yen, why wouldn't we want weaker yen, right? Why wouldn't we want to have inflation? Because our problem is deflation, right? Like, why should I be like the American? I think, again, China may have drafted too much off of kind of the American sort of policy objective. They probably, in this case, could look at the Japanese central bank and go, hey, look, one way to really boost the economy, boost investment, tourism, export is a weaker currency.
Jason, thank you very much for this. It's been very interesting, and we're just running out of time, but I would really love to do it again.
Absolutely.
Fascinating. Thank you, Jason.
So, Michael, I think that Jason has made a few very interesting points. The whole story about China attacking Taiwan is more like, a talking point rather than a real threat.
Yes, and I think it's a much more sophisticated view of the relationship between Taiwan and China than you get normally.
We tend to think very often that the power of the Chinese Communist Party is a given, but actually they do think about the opinion of the people.
Yes, and there is politicking within it, and they have obviously had to face challenges, and he explained some of those challenges to us. The pressure, for example, to keep the currency strong, and the challenge they have in Indo-Pacific itself.
Thanks for listening. This has been Capital Horizons.
So if you would like to see or learn more about Capital Horizons, please subscribe below.
From Michael and I, see you next time.